Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's March 30th. This will be our chart lesson for the day. And real quickly, if you were looking for the chart lesson last night and couldn't find it, you'll notice you'll probably have noticed it's there now, um, but it's a little different. I didn't put it up till this morning. I had to run out of here yesterday, and I planned to come back and do the chart lesson later in the evening, and I just didn't get a chance to get back to the office. I had some stuff come up. Nothing serious. Everything's good here. I know a couple of you were worried that maybe something was going on, but no, I'm good. I apologize. I just didn't have time to do one yesterday. So, but I didn't go through all the trades or anything, but I did put my chart up with my channels and just showing my lines, basically without the trades, just so you could see what it looked like, what I saw yesterday. So hopefully that was a little bit of a help. But no, there was not a chart lesson. So uh, pretty good day today. It was really strong uphill. I really thought we'd go higher than this, but this is why you follow the price action and you do not ever guess, because we ended up trading. Notice that when we broke through here, we never came back and tested that. And look what prices do. Once they started heading lower, you should have been thinking, hey, we're probably headed back to test this. Unfortunately, I don't see any good way to get into this first short. Look at that thing go. It just falls off. There's some reasons to consider maybe entering there. Um, but that big bullish bar there, I just don't like going short below it. And then once it starts free falling, you cannot chase that trade, because look, it was doing the same thing here. And if you chased it, look what happens. It bounces and stops you out. So you can't chase these trades. You don't realize what they're going to do till after the fact. So when you miss a trade like this and you just didn't see a good entry, I say this a lot. If you haven't heard it, don't let that shake you up, because what that does is that shakes you up and you end up like right here trying to get in a trade, and then you get whipsawed and stopped out only to watch it keep going down. So just keep that in mind. But once we started heading lower, you got to figure that this was the target, because we never came back and tested that. And prices are going to come back and test these areas. They do it over and over and over. And just like we didn't test this area when we pushed through there, look, we came back and tested it right there before we headed lower again. And so that's what prices do. So anytime you see an important support resistance area like a double top here and you shoot right through it, at some point prices are probably going to come back and test that, unless it's just a runaway trend. And it did look that way, but when we started heading lower, that's what you got to assume, is this is where we're headed right here. So keep that in mind. But we had the two-tiered channel working up. We actually had an overshoot here. That'll happen a lot during the overnight hours, and they're not as important as it when it happens in the regular hours, in my opinion. Um, Usually, if you see an overshoot, you're going to get a break pretty soon thereafter. We still got one, but we had a pretty nice rally up here before we really got another one, or before we actually got a break, I should say. So even though so just you kind of ignore these in the overnight hours, and all this stuff in the blue is overnight. The white is regular trading hours. So um, keep that in mind. But notice we had the break here of this two-tiered channel. We moved to a new high. There's two legs up. They're not measured, but and that's the reason. It's another reason I didn't like entering here. But and then we moved down. We started trending down, and again we had a two-tiered channel. Um, it could be that it's just a spike in a channel here, and you got a break. But really, by the time you got your confirmation, you get your break pretty instantly and a move to a new low, and then we kind of reverse. So you could have seen it like that, but I believe it's a two-tiered channel because the midline fits even back up here earlier. So I believe we have a two-tiered channel here, and you got a break. Prices never made a new low, but we ran out of time and the day ended. So this line, this little faint line, you may not be able to see it real easily, but that's your switch over, and you can see the previous days right here. That's the close and the open of the new day. And I get that question a lot, is if I enter during this part of the overnight, do I still get day trading margin? And you do. If you enter anytime after this day, which is 3:15 on Tuesday, you're good as long as you exit by 3:15 on Wednesday. And your broker may actually have a little earlier time. I think Ample, if you're not out by 3 o'clock, I think they'll kick you out. So be aware of that because you may not be able to stay until 3:15. And some brokers, Amp may even do it now. If you stay in past their time that they want you to be out, which may be 3 o'clock instead of 3:15, they may charge you a penalty for not exiting. So, um, but that ensures you don't lose your day trading status because the a lot of brokers like Amp won't even let you carry overnight trades. Some will. So just understand that if you entered anytime from 3:15 on Tuesday afternoon, it opens back up at what, 3:30. So if you entered anytime from 3:30 on before 3:15 today, which is this line right here, and you go past that day without exiting, that if your broker allows that, you automatically have to put up um, the full margin. And so your margin may go from $400 to 3,500 or 4,000. It's pretty high. And so just be aware of that. And you kind of lose your day trading status as well. There's can be some other penalties, but generally I think AMP just kicks you out, and I think they do charge you a penalty. I don't know what it is. I'm not even sure they still do that, to be honest, but I think if you carry it over, I mean, I haven't carried a trade over in, I try to be out by 2 for that very reason, because I don't want to get in there and be, worrying about a trade. Um, so make sure you understand your broker's rules, I guess you should say. But let's back out here, talk about today's trades, and wrap this one up. So this trend line was pretty easy to find off these first 2 swings here using the closes. Um, and even if you didn't, if you drew them off these highs right across here and drug it down, it fit. So it was pretty easy to find. You should have had it well before prices got here. But anyway, regardless, at first I thought maybe there was a spike in channel here. But notice you made this new high, you pull back, first entry, pull back. There's a nice second entry that sets up right off that EMA, but you draw that trend line right there. And when this turns down and everything closes there and you get that big bearish bar, I like going short there because I thought we might have been coming all the way back to here at that point. So it's a quick, easy scalp, but then you get the break of this trend line here, and then you're kind of moving lower. I didn't like taking this second entry short, although actually that one probably should be green. I didn't like taking it because we were kind of getting flat here, and you can see how the EMA is kind of flattened out, and there was some previous support kind of across there. So I thought it was better off to wait on the failed second entry long, but thinking about, looking at it after the fact and putting a little more thought in it, that probably could be green. I mean, it was real tempting. And I remember thinking after the fact, hey, you should have taken that trade. But so I'm going to change it to green. But here's the good one that comes up. Now you get notice the new high, you pull back first entry, pull back. There's a second entry long, it fails. And look how bearish that bar is. And if you see the channel, prices are probably coming back to the channel at least here. And we may get lucky and it may come back and test this right here. So it's a quick, easy scalp, nothing more, and then it bounces. Well, you had your channel coming down, you got the break, you got a couple of pushes down to a new low. And even though this is the low, you got to put your safety stop on if you if you go long. This is really the bar that kind of set it up. Again, it bounces right off that trend line. So if we get a break above that, you want to probably go long now because it's right off that trend line. And this turns out to be a really nice trade. And if you caught that trade, you could have ridden this up until at least the break, but then you probably could have held on to the new high here, and you don't know which one's going to be the final. So this is probably where your new high, this is actually where your new high comes in. So this is probably the smart place to exit. Sure, if you'd held on to this one, you might have got a few more ticks, but why risk that? So anyway, that's where I would have exited if I held on at the very least. So, but notice how we bounce there. We're working up. There's a little shorter term trend line here. We get a break, move to a new high, and you get a failed second entry short right there. It's pretty much two measured legs up. We didn't quite have a measured leg, so that's why I somewhat, there's your first leg. And you can see the second leg, we almost got a perfect measured move. But when we backed up right there, we weren't quite there, and that's a failed second entry short. Notice that new low. First entry short, moving higher. Second entry short, it fails and turns up. It's so close to that high, but this has been a really strong trend, and you might have even been thinking measured move to this from here. So there's some reasons to still want to be long, but it's just so close to that little 2-bar matching high, and it's right into the midline, and you got to be careful. Midlines are not, um, they turn prices down as easy as prices push through and come back and test them and go higher. So, and in this case, they did end up pushing it down, but it got another move up. So I like that one for um, if you're wanting to be a little aggressive for the reason I just stated. It's a trap. It's close to a measured move, but it's not quite a measured move. So there's a chance you're going to push on up one more time, and that's what we did. And when we got to almost a perfect measured move, it turns down, and now you got a channel working down. We get a break here. There's a second entry long right here, but we're going sideways too much, and it fails and turns down. I don't think I would go short there. Um, you could make an argument for an aggressive trade there, but I think I would skip that because it's been so strongly up, and I would wait on something up to go, to go higher. I don't like this long. You got a new high here, and there's a second entry long right here, but look how bearish that bar is, and by that time you're in this channel, so you don't want to go long right into the high of that. So wait and see if you get that little failed break lower. Let me move these out of the way so you can see that, and you get it right here. You failed, and notice how you had all those matching lows that pushed lower and turned up, and you get that nice bullish bar right there. I like that one. Those are the kind that you sometimes catch a very important low, and you actually would have here, and usually you get runners out of them too. In this case, you didn't get any runners, but a lot of times you'll catch an important low and you'll get runners, and they just keep going and going and going. But then it pulls back again and gives you another chance. If you weren't out yet, I like adding on right there because you're probably going at least to here, up to these highs, and there's a chance you may even go higher because you're looking for a retest of that high. So there's your add-on, or if you weren't in yet, definitely you probably want to jump in there. And now you got a trend line working up. You get a break, and then notice the new high. You pull him back, first entry. You pull back again, get a second correction. Then there's a second entry long right there. And prices are headed up. And then you get that failed second entry short, so it doesn't matter so much what this bar looks like. And just go long above it. And we push up to a new high, and that's when the big sell-off comes. So now you got a break of this one, 2 legs up to a new high. You had a break of the bigger channel, 2 legs up to a new high. It's not a measured leg, but it doesn't matter because you're finding some resistance across here. I don't see a good way. If this would have been even slightly less bullish, I would have said, hey, we're probably coming back to the EMA anyway, but I just wouldn't risk it with that bar right there. And by the time you get this bar, you're already back to the EMA. So you just have to kind of watch it. And never could it break higher. It just keeps going and going and going. It's one of those kind that you just have to look at and say, hey, I wish I'd have caught that, but don't let it shake you up and mess you up because there's just no good way to get into it. If you follow the rules. And as long as you follow the rules, if you miss a good trade, you can't be upset with yourself, because if you do, you'll just screw up somewhere else, and you don't want that. So, but anyway, look how we just shoot right through the EMA. Then you get a first entry long, pull back, you get a second entry long, it fails. So it doesn't really matter what that bar looks like, but notice it's kind of a double test of that EMA as well. It's that little test something twice. And really the main thing is it's a trap. So, and might get a measured leg just like that one. And so even though you got a pretty good move here, you didn't get that measured leg. And any runners probably would have survived here. What I really would do here, since this bar, you got to be careful doing this. So I'm leery about saying it because you will miss a lot of good trades. But because that bar is kind of neutral and there's a little stack up here, I would have let this bar break below this one. In other words, the bar that broke lower here, I would let it break lower and I'd drop a limit order in here, maybe a tick or two back in this, and you could have gotten filled at least 2 ticks back in, I know, maybe more. And that just gives you a little room before we get to here, but it doesn't matter, it takes on off. And then you actually get another second entry short right here, but look how bullish that bar is. And notice we've already had a break and a new low, so just you got to be careful going short down there that far down, because it's going to bounce soon. And guess what it does? It bounces right here. And notice this little channel moving up. I don't really have that one probably quite as steep as it is. I don't have the other side on it either. But you can see that. And you get a break and push to a new high. If I'd have got a second entry here, I probably would have looked for it. But this has been coming down. So there's a strong chance we're not done yet. I mean, that's a big move down. And that's really, even though you get a trend line here and a break with a new low, that's really could be considered one leg. And then you want to look for a possible measured leg down from that. You don't quite get it, but you can see we're moving lower here. But when you get the break here and the move to a new high, that's a second entry short. This is a double bottom, so you can count it as a low. And pull back first entry, pull back. There's your second entry right there, and it's a little failed break higher. You actually have a failed break lower than a failed break higher out of all that congestion right there. But you got the break of this and a move to a new high. And the bias is still down at this point, and you can see the kind of double. I don't have the line across there, but that's a failed break higher above that resistance right there as well. Hopefully you can recognize that now. It's a failed break higher. We're going to snap back, and we're probably going to make another leg down and look at it go. And you could have had a runner here, and then it shoots right through the EMA, just what you want to see. If we're going lower, then it pulls back in a first entry, then it pulls back, and it's a second entry. Look how bearish that bar is. Just go short right there, and boom, it's off down again. It comes back and gets your runner on this one, unfortunately, but that's why I like these. This is a good example. I was talking about those failed breakouts that you can catch the high or the low. In this case, you're catching a high, and it's an important high, and you catch a runner off of it, and you can ride this thing. And when it touched down here and started bouncing, I would have exited, because that's where you're looking for it to probably turn. And sure enough, that's right where it turns, and it goes higher. But those were two nice setups, and this one was tempting. This is almost a repeat pattern. Let me draw the line so you can see it. You can see that resistance across there. It's just like a smaller repeat pattern. And you know what I say about repeat patterns, a little failed break higher. But you don't, and you know prices are probably going to test this low, and we're probably coming down to here. So there's some reasons, but it's a real neutral bar. I didn't really like the bar. It's just a first entry because this made a new low. So, but I mean, you could argue to make that one green, and so I will. But I think your better trades or entries were further back up, and of course you'll hear me say that a lot. So, but let's go ahead and make that one green, because I know there's some of you that probably like to take that trade, and in some cases I might be tempted to take it too, but not in the lunch hour at noon. If it was earlier in the morning, maybe. And now we've made a new low, so I'm not real eager to enter anywhere else in here with all this, going sideways and dojis, and I mean, that's congestion. And what happens usually when you break out of that, you fail in reverse, and that's exactly what happens. As bearish as that looks, it fails in reverses, and it's headed the other direction. And also, you've got your break in one leg down, correction, second leg down. So I don't like going long in there, and you just kind of miss it. But you do get a second entry long here. Notice the new high, pull back first entry, pull back second entry. So there it is, and that's right off the key entry point, the trend line, fairly bullish bar, and you figure you're probably going at least to here, and you got a room, and so you get that one. Then it pulls back, makes a lower low, and it looks like it's going to go lower. Of course, hopefully you know you never go short right there. The move has already happened, so you got to get more of a pullback, even though it could go shorter. Unless you get a trap here, you don't want to be going short. Uh, so when it fails right there and turns back up, I like going long there because you got them trapped because there's so many people going to try to get short right there that don't know any better. And there's really kind of a double bottom across there. So when you're going short right into that, and off it goes. And there's actually you could actually treat this as a failed second entry short because there's a new low, pull back first entry, pull back in a second entry. It gets more than 4 ticks, quite a few more. But notice where it bounces again, right off that congestion line. So you might have thought about entering there, but the reason I'm not even going to make that one green is because look where that trend line is, and you'll see that a lot. It'll pull back and test that again and then turn down and the bottom fall out of it. So, excuse me, I'm not going to even give that a green one because it's right at the 2 o'clock hour, and you don't want to make a mistake this late in the day. If it would have turned down again and given you a second entry long there, yeah, maybe. It does give you a second entry here, but it never breaks lower. It does make a lower high, so in essence, that's a second entry. But that's after 2 o'clock now, so you can't risk it at that point. So, but there's several really good trades in here today, several really good runners in here as well. So in the end, felt like we just went sideways, and we did for most of the trading day, but we actually closed up 10 points because we rallied so much in the overnight. So decent day. Pretty obvious we're trending up, and then it's pretty obviously I mean, once you got past this point, it's really obvious we're trending down now. And so it shouldn't be anything too difficult. Where it gets interesting is in these transition points. And I had another trader contact me today by email and says for whatever reason, he's always trying to pick tops and bottoms, and he can't ever get it right. Well, that's the hardest thing to do. So until you get really good at this, skip those. Stay with the trend until you get a break and a new high, and then quit and wait till you get a trend in the other direction. And once you get a trend in the other direction, stay with it until you get a break of the trend line and a new low. And so by doing that, you don't get whipsawed. But there's also these shorter term ones, like you got this one breaking a new low, and then there's one going up, breaking a new high, and there's one coming down, break and a new low, and then there's one coming up, break and a new high. And then we actually made a much higher high, and then we trending down into the close. So they're there, and that's why I say draw those shorter term ones as well. So anyway, that pretty much wraps up today. We'll be back again to do it on Thursday, but I'm going to wrap it up for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.